Bitcoin ETF. Everything you need to know about Bitcoin ETFs. Have you heard of Bitcoin ETF? Well, you may have heard of Bitcoin ETF and wondered what's it about. Well, a Bitcoin exchange-traded fund, often known as Bitcoin ETF, tracks the value of Bitcoin. Instead of cryptocurrency trading platforms, ETFs can be purchased, sold, and exchanged on standard stock exchanges. This is a smart approach for mainstream investors and speculators to gain exposure to the Bitcoin price through a dependable vehicle with which they are likely already familiar. Hello and welcome, and I also want to tell you that you're really lucky to be watching this right now. In today's video, we'll go over everything you need to know about Bitcoin ETF, how it benefits investors, what it can do, and how it affects Bitcoin's price. But before we go any further, guys, please give this video a big thumbs up and don't forget to hit the subscribe button. But did you know that exchange-traded funds are not really a new concept? They're really common in the financial sector. ETFs can be used to acquire price exposure into many assets and industries, including commodities and currencies. Or they can be set up to focus on environmentally friendly or diverse enterprises. Although the US has yet to authorize a spot Bitcoin ETF, investors can invest in Bitcoin future ETFs. The distinction between the two is that a spot Bitcoin ETF is backed by genuine Bitcoin, which we all know as BTC, whereas Bitcoin future ETFs are backed by Bitcoin derivatives. What you need to know is that the launch of a Bitcoin ETF would expand the range of options available to US investors. What are the advantages and disadvantages of Bitcoin ETF? Although anyone can buy Bitcoin via a cryptocurrency exchange or a Bitcoin ATM, an ETF would provide several advantages including convenience. An ETF does not require learning how to use a cryptocurrency wallet or opening accounts on cryptocurrency exchanges. Moreover, users do not directly own BTC. They're only receiving price exposure without asset ownership through investment instruments and tax rules they're familiar with. It is also beneficial for portfolio diversification since an ETF can hold many assets. As part of the fund, a Bitcoin ETF might own genuine Bitcoin, Bitcoin-related equities, and other assets. Even if it solely owns BTC, investors get the ability to diversify their traditional market portfolios. Although these advantages are substantial, a Bitcoin ETF can only do so much. There will always be some things that one might consider a disadvantage. Fees, for example, management fees are frequently baked into ETFs, which means that a portion of the money in the pool is going to pay the individuals or organization administering the fund rather than investments. Nevertheless, guys, don't forget to look at the cost ratio indicated on an ETF before investing. You want it as low as possible, ideally around 1%. Furthermore, you should be aware that you have no actual Bitcoin ownership, because a Bitcoin ETF cannot be swapped for other cryptocurrencies. After all, holders do not own the asset, and that is why they get only price exposure. There are also restricted trading hours. As we all know, crypto can be bought or sold 24 hours a day, 7 days a week, but financial exchanges like the New York Stock Exchange are only open from 9:30 a.m. Eastern Time to 4 p.m. Eastern Time. So if there's a significant movement in BTC's price overnight, you won't be able to do anything about it until the market reopens. While trading Bitcoin ETF, you may also come across inaccuracies in price. Yes, because changes in the price of Bitcoin may not be reflected in the ETF's value in real time, especially if the ETF has numerous holdings. So, how can you gain access to Bitcoin ETFs? While the United States has yet to authorize any type of Bitcoin ETFs, it does exist in other countries. Because of the growing popularity of the cryptocurrency business, numerous providers have issued a Bitcoin exchange-traded fund in countries like Canada, Europe, Brazil, and Jersey. As I previously stated, there is no spot Bitcoin ETF in the United States. However, there are Bitcoin future ETFs and alternative options to invest in ETFs that focus on Bitcoin invested or neighboring companies. These ETFs may invest in Bitcoin companies like Tesla or in mining infrastructure or other technology. So, what are the primary concerns that are preventing Bitcoin ETFs from being approved? One of the most serious concerns about Bitcoin ETF proposals is the issue of custody risk. ETFs that physically own Bitcoins are vulnerable to price fluctuation and potential security breaches, and as a result, they risk going bankrupt or losing control of the underlying assets and ceasing to maintain the fund. Furthermore, Bitcoins are largely traded on uncontrolled web exchanges that can be hacked or go out of business. ETFs dealing with Bitcoin derivatives, on the other hand, may entail risks connected with assets value monitoring and accuracies, which are conceivable because cryptocurrency marketplaces are less transparent than regulated markets. Since leveraged funds are a possibility, the regular volatility of crypto assets is another major source of concern, since normal crypto behavior might cause significant fluctuations in the ETF's value. Any investors in a leveraged crypto ETF would then be fully reliant on the fund manager's ability to accurately follow the underlying asset's performance. Furthermore, because Bitcoin transactions are reversible, any badly completed transactions could impact ETF investors. But is a Bitcoin ETF preferable to owning Bitcoin? Guys, there's no simple answer to this question. Every investor has unique requirements and expectations. A Bitcoin ETF, for example, does not represent BTC ownership. Nevertheless, it provides the essential price exposure. Furthermore, an ETF may be more advantageous to individuals who desire a more passive price exposure, users who are skeptical of Bitcoin, or traders searching for a straightforward way to diversify their portfolios. Owning Bitcoin, on the other hand, is advantageous for people who want to engage in regular trade. Use BTC as a currency or delve deeper into cryptocurrencies through trading or other means. Anyone can acquire Bitcoin after verifying their identity from an exchange broker, or ATM, although spot Bitcoin ETFs have yet to receive SEC approval. Bitcoin futures-based ETFs exist, but merely price exposure may not be enough for everyone. What effect does a Bitcoin ETF have on the price of Bitcoin? Gold is an example of an exchange-traded fund's beneficial impact on underlying asset prices, from which Bitcoin estimations might be projected. The gold market is divided into 5 broad sectors: the official sector, which includes the states, central banks, and so on; jewelry, unaccounted and other fabrications, and 2 entirely speculative branches, bars and coins (BNC), and ETFs and similar. The combined approximate market size of all sectors is 188,268 tons. It can be argued that given that the gold ETF market size is approximately $75 billion at current gold prices, or 2,158 tons, representing 5.6% of the BNC market share of 38,444 tons, a Bitcoin ETF could theoretically attract up to $6.7 billion into the market, representing less than 6% of the total current Bitcoin market cap. According to experts, this influx would not have a one-to-one influence on Bitcoin prices, but would instead follow a relationship known as the fiat multiplier, which employs estimated multipliers in the 2 times to 25 times range. In other words, such an infusion of capital would significantly impact Bitcoin prices due to price momentum and investor feedback loops. If the median multiplier of 13.5x is used, a 5.6% flood of cash would result in a 76% spike in Bitcoin prices. The What's on Crypto team, on the other hand, predicts a new all-time high of more than $62,000 in the short future if the ETF is approved. Another intriguing example is how gold prices altered following the approval of the first gold-backed ETF in the United States in November 2004. Following its adoption, gold prices increased by up to 318% over the next 7 years. It is worth mentioning that this price increase was accompanied by significant and stimulating changes in monetary rules, all of which contributed significantly to the observed price increase. So, should you invest in a Bitcoin ETF? Bitcoin is still relatively young in comparison to traditional stock market investing, so it lacks the historical track record that investors may use to forecast future success. While the price of Bitcoin and BITO may differ, Bitcoin is highly volatile, and the ETF is also expected to experience volatility. Bitcoin values reached an all-time high of more than $60,000 earlier before dropping half of their value and trading below $30,000 before rising again. Nevertheless, investors can still allocate 5 to 10% of their portfolios to buying cryptos or investing in crypto-linked ETFs such as BITO. Furthermore, because these are high-risk, high-return assets in the portfolios, you should remember that investments in any speculative investment should never be made at the expense of other financial goals, such as paying off high-interest debt or saving for retirement. Bitcoin ETF can be purchased using a conventional brokerage account. This ETF provides access to many people who want to participate in Bitcoin and other cryptocurrencies, but didn't know where to start. BITO is a safe way for investors to enter the crypto world because it is regulated by the SEC, making it the first regulated cryptocurrency investment vehicle to go mainstream in the United States. We have come to the end of today's video. Thank you for sticking to the end. If you found this video useful, please do well to give it a thumbs up. And don't forget to subscribe too. Take care and see you next time. Till then, bye.